Hey everyone, welcome to Bitcoin and Crypto News. Today is July 23rd, 2021, and today we're going to take a look at some of the top news stories in the space and also a look at some of the recent price action from Bitcoin and the crypto market as a whole, as it appears that a recovery may be in place. But it's probably too early to tell if that was in fact the bottom, or are we just in a dead cat bounce and we actually might be heading lower towards 20K. We're going to get into that and much, much more. Be sure to hit the thumbs up on the video and also subscribe. Before we dive into the news, let's take a brief look at the market. So switching over to CoinGecko, as you can see, after yesterday's recovery, the market is pretty much trading sideways. We have Bitcoin is up 0.6%, Ethereum 3.2%, and then everything else is either slightly down or slightly up. We do have Uniswap, which is up 6.2% over the last 24 hours. But if you've been in the space for any amount of time, you know that the market's really going to follow Bitcoin. So as Bitcoin's trading sideways, we can't really expect the altcoins to do too much. So let's take a little bit of a deeper look into Bitcoin. So switching over to the daily chart for Bitcoin, as you can see, since the big drop off in May, the price has pretty much been trading sideways and we're looking to recover. If you notice, the green line on the chart is the 50-day moving average, and that's basically the bottom line for a bull market. So before we can really see any turnaround in Bitcoin, it really needs to get above that and use that line as support. And looking, we are just about around 6 to 7% away from reaching that and turning that into support. The price would have to go to right around $34,500 to make that support. So we're still about $2,000 away before we're really even possibly thinking about the market turning bullish. All right, and with that said, let's get into the news. Our first story, we're going to take a look at Blockfi. So unless you've been living under a rock, I'm sure you've heard of the super successful crypto lending platform, Blockfi. The last couple of days, they've been in the news with issues dealing with regulators. Blockfi, which is one of the most popular cryptocurrency companies, is in a little bit of hot water with regulators. They've been hit with a cease and desist notice from 3 different state regulators for its Blockfi interest accounts, or also known as BIA products. First in its home state of New Jersey, and a couple days ago we learned about Alabama and Texas as well. It seems likely at this point that more states and eventually the federal regulators will follow and get involved. Many people feel that Blockfi, Celsius, Voyager, and other similar services are just like our banks who we deposit our money with, and in return they give us a yield on our money that they are then lending out. However, the fact that the yield on a savings account in the US has fallen below 1% and has no signs of increasing anytime soon has many people jumping at the chance to earn 5%, 6%, or even higher with these platforms. So what's the deal? Why are these states giving Blockfi a hard time? And will it be limited to just these 3 states and to just Blockfi? Or should we be worried about other companies like Celsius? And should we also be on the lookout for other states to start jumping in on this? The question here really comes down to whether or not Blockfi is offering a security. The company and their CEO took to Twitter where they published a statement in regards to the cease and desist, where they said, "We are in active dialogue with multiple regulators to demonstrate that the Blockfi interest account, BIA, is not a security and should not be regulated as one. We firmly believe that the BIA is lawful and appropriate for crypto market participants, and we remain steadfast in our commitment to fight for consumers' rights to earn interest on their crypto assets. We recommend discussions with regulators and believe that appropriate regulation of this industry is key to its future success." So taking that at face value, it looks like Blockfi is willing to work with regulators and hopefully fight for its users. But at the end of the day, it doesn't really matter how willing they were, because when you get a cease and desist from the government, you're going to have to respond no matter what. And the question here really comes down to whether or not Blockfi is offering a security product. Personally, I believe the answer is no, due to the fact that the SEC has already come out and ruled that Bitcoin and Ethereum are not a security, and so you should be able to use that to earn interest on. But the law is not really that clear cut. According to the Securities Act and the Exchange Act, which defines a security broadly as being any stock, note, treasury stock, security future, security-based swapped, bond, evidence of indebtedness, certificate of insurance, transferable share, investment contract, or in general, any interest or instrument commonly known as a security. Personally, I believe the biggest issue here is that the US dollars that tend to flow into services like Blockfi tend to stay with the platform, whereas when you deposit into your bank, the banks then loan those dollars out to its clients and customers. And one of the biggest clients of the banks is the government. And currently, those dollars that we're lending out is helping to keep the repo market afloat. So services like Blockfi and Celsius are potentially hindering the money supply and the flow of money between large banks, the Federal Reserve, and the government due to it being locked away with Blockfi and the like, which in my opinion is the real crux of the problem here. So only time will tell what will happen with Blockfi and what steps they will have to take to avoid more of a crackdown by regulators. They may have to go the Kraken route and file for a banking charter, but Blockfi has until July 29th to respond, so we should find out more over the next handful of days. Despite the cease and desist order, not all is negative in the Blockfi world. They are set to complete their Series 3 funding in 4 days on July 27th. This round of funding is estimated to be worth $500 million, and they are aiming to bring the company public within the next 12 to 18 months with an expected valuation of $4.76 billion. Previously, their goal was to go public sometime in late 2021, but that is off the table currently while they deal with regulations and work with regulators to make sure they're compliant to operate in the U.S. Switching gears, despite the lackluster recovery from Bitcoin and crypto, it appears that smart money is truly going in on Bitcoin and going in heavily. One of the most well-known and largest investment companies and one of the most famous families, the Rothschild Investment Corp, shared in a new filing that has more than tripled its Bitcoin exposure through GBTC over the past quarter. In a filing with the SEC from July 19th, shows that the investment manager holding of the Grayscale Bitcoin Trust, also known as GBTC, grew to 141,405 shares in quarter 2 of 2021, up from 38,346 in quarter 1, increasing their position from approximately $1.92 million up to $4.2 million. This is yet another example of a major investment fund or billionaire coming out to say that they have or plan to purchase Bitcoin. And in my experience, where there's smoke, there's typically fire, and it appears that that is the case as Bitcoin continues to go more mainstream. The ultra-wealthy continue to warm up to Bitcoin. According to a study conducted by Goldman Sachs, 50% of their investors want exposure to Bitcoin. Per the Bloomberg report, around half of the family offices in business with Goldman Sachs want to invest in Bitcoin and cryptocurrencies. The banking giant conducted a survey with participation from around 150 family offices with a global presence. The part I found most interesting is that 15% of the participants already had exposure to Bitcoin or some other cryptocurrency. And these are not just their wealthy investors, these are their ultra-wealthy investors. 22% of the survey's participants have around $5 billion in assets under management or more. 45% have $1 billion and up to $4.9 billion with the fund. So 67% of respondents have anywhere from $1 billion to $5 billion in assets. Sometimes you just have to follow the money, and it certainly looks like the money is heading into crypto in numbers that were completely unbelievable just a few years back. And if you've ever felt FOMO in the crypto market, just know that you're not alone. Apparently, retail is not the only people susceptible to feeling FOMO, according to Switzerland's largest bank, UBS, who said that their clients have crypto FOMO. During an interview, CEO Ralph Hammers said that clients are looking for different alternatives, they hear about crypto, and there's a bit of fear of missing out as well. He went on to elaborate that they read about it in the papers, they see the volatility, so honestly we advise with caution, we don't offer it actively. We feel the crypto itself is still an untested asset category. Looking at that on face value, it may sound a little negative, but we have to factor in that this is the largest bank in Switzerland, and they're acknowledging that Bitcoin is something their clients are getting interested in. Sticking with more wealthy clients looking to get into Bitcoin, we have news from everybody's least favorite bank, JP Chase, who announced that their clients see Bitcoin as an asset class and is something they want to invest in, have a plan to offer it, and JP Chase has a plan to offer their wealthy clients a way to invest in an upcoming actively managed fund, which will make them the second largest bank to offer access to Bitcoin, second only to Morgan Stanley. Once again, the key word to pick out here is wealthy investors. Bitcoin and crypto has been one of the only, if not the only investments in history where the general public has been able to front-run the institutions, the uber-wealthy, and Wall Street. But those days seem to be coming to an end. So your chance to stack some cheap sats may be coming to an end. Luckily though, Bitcoin ownership has actually tripled over the past 3 years with young investors. Young investors is defined as people under 50, which jumped from 2% back in 2018 to over 6%. Compared to only 3% for individuals over 50, which grouping also saw a 3x since 2018. Although this is a very small percentage, the growth is undeniable, and perhaps the most bullish news from this study is that the percent of investors who view Bitcoin as very risky dropped from 75% down to 60%. And for those respondents under the age of 50, fewer than half view Bitcoin as very risky. I believe there's been a switch in Bitcoin where it is now more risky to not hold any as opposed to investing in it. And it seems the rest of the public is starting to catch on to that idea. The last bit of news for the day is perhaps the most bullish of them all. Despite the run-up in the price of Bitcoin reaching as high as $64,000, Bitcoin mining has become increasingly decentralized. Bitcoin miners have not become more corporate as the price increased. Mining is actually seeing more anonymous and small-scale entities joining in. Part of this certainly has to do with the China crackdown, which forced a large number of miners to either close up shop or move to a more crypto-friendly country. So despite the negative impact that had on the price of Bitcoin, it is definitely a net positive for the overall security of the network and longevity of Bitcoin. And that's all the news I have for you today. I want to thank you for hanging out with me, and if you've enjoyed the content, be sure to like the video and subscribe for more. Have a great day, and I'll catch you in the next one.